Good morning, traders. It is Monday, July 14th, 2014. Thanks for joining this Trader Bite. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of overnight news. Moody's maintains negative outlook on Spanish banking system. The Bank of Portugal accelerated management changes at Banco Espírito Santo. Wants new execs in place immediately. If you recall, this was the Banco Espírito was a big part of the drop that occurred last week in Europe on fears of a banking crisis in Portugal. Wall Street Journal's Hilton Rath, who's a Fed watcher, says the Fed debate on whether to hike rates sooner than planned is heating up due to improvements in the job market. Expects a slight modification in the tone of Fed speakers going forward. Could change the rate outlook. Fed's Williams, known as Dove, says normalization may now be able to start a touch earlier. Okay, so look for a kind of a new set of sheet music that everybody's going to read from going forward. As far as and then of course everybody knows about the things that are going on in Israel, shelling into Lebanon, and a small ground troop incursion into Gaza. Not much from Iraq or ISIS. The Ukraine it looks like the situation is degrading there again. Government warplanes attack rebel positions, say they kill up to 1,000 militants. So that creates a small measure of risk for us, especially for Europe. Looking ahead at what the daily calendar has on it. I don't see anything for the U.S. This morning except for the usual 10:30 3-month bill auction for 25 billion and 6-month bill auction for 23 billion. Fed purchases of 23 to 30 year in the 1 to 1.25 billion range at 10 o'clock Central. We have Draghi speaking at noon Central at the European Parliament in Strasbourg. So that there are no economic numbers expected today. So nothing to worry about there. Let's take a quick look at the overnight session. Actually, let's look at what we did last week before we migrate into what we did in the overnight session here. So overall, the market pushed to new highs two Thursdays ago at 78 and a quarter. This is a 15-minute day session only chart. Wide day session only, mainly because the overnight session does not involve the 500 stocks in the S&P 500. Yes, there is activity, but the S&P 500 in the overnight session acts in sympathy with other markets, whether it's the Asian indices or European markets. There's not enough volume, because I'm looking at the volume profile. There's not enough volume to create a substantial change in the day session. For example, on Friday we traded 1.16 million contracts in the day session. The overnight session was not much more than 100 and I think it's 140,000. So it's not even 10%. So I'm not too worried about leaving the overnight session out for my analysis just yet. Again, we're trading a futures contract that is built on the S&P 500 cash index, which is built on a market cap weighted set of stocks that are traded during the regular trading hours in the US mostly. So just to keep things kind of clean. I just focus on the day session. I do give the night session or the overnight Globex session consideration. In a minute, I always go over the overnight session to see what it has done and is trying to do. But overall, just to keep things clean, I want to see where the gaps are and stuff that happened in the cash, which is represented here by proxy in the future. So the high at 78.25. Since then, VPOC moved down, value moved down, price action moved down, and then we had a day with a nice pullback, which pushed to 68.25 to 68.25, and then the next day we had a large gap down that ended up taking back the prior day's territory and going back into the 2 days of trading here, and overall shifting the point of control lower. On Friday, we had balance. The point of control of Friday is inside of the value area of Thursday. Friday finished strong. It looked like it was going to attack the 64 again. It could not quite get there. It missed by 4 ticks at 63. But overall, normal variation day with a very clean LVN here at 1960, and the market closed near highs on Friday. So this is considered fairly strong, a fairly strong finish from balance on Friday. The expectation is for 67.25 to be taken out, 66, 67.25 to be taken out, and then we resume essentially. If we did that, we resume the same trader bite hypothesis plan that we had on Wednesday. It's almost as if what happened on Thursday, Friday can be just wiped off of our chart, and we're back to where we were on Thursday. And on Thursday or Wednesday, and on Wednesday, where we left on Wednesday for Thursday's session is essentially looking at pushing into close the gap at 71.50 and then ultimately retesting 75. Any push through 75 is likely to give us new highs. New highs are likely push to the measured move target that is left, which was we stopped 2 ticks short of it here at 78.75. We stopped at 78.25 2 Thursdays ago on the 3rd, and then the next target up is 79.75. Opens up. I have a new measured move that goes up in this pullback right here. Let's throw that up right now. My charts here at the office and the ones I did homework on at home did not sync. So new measured move target at 87, 87 and 87.75, and then yeah, 87.75. Okay, so that's what we have looking on top. First things first, we're looking for 75 to be tested. Very important LVN here at 75. Why? Because the market created a very distinct low volume node here. You can see a low volume node's a notch out in the profile. If you do not understand what I'm talking about or need a base for what I'm talking about, please go to futurestrader71.com and have a look at the chat log under resources. And if you want, you can get the webinar series, and then it walks you through all the pieces so you have a foundation of what I'm talking about. And what I'm really focused on in my approach to the markets, which I believe is a very strong way to look at the markets, is to look at the market as an auction, the market as a mechanism for testing, to explore buyers by auctioning down. Prices move lower to explore for buyers, move higher to explore for sellers. As sellers step in, they leave footprints in the sand through prices, and especially through the volume profile. They leave a footprint as to how they feel about certain prices, and that is what we're tracking. Okay, and so this this LVN here that was left behind was retested in the overnight session on the 7th, and then retested in the day session, and then from there we failed all the way down to the low of 45.75 last Thursday. So it's a very distinct and clear dividing line that is remaining behind. So this is the target upwards. Currently we're trading 70.75. The high overnight 71.50. So we took out this gap. This gap close at 71.25, which was Thursday's target had we not gapped lower, 71.25. We took that out overnight by a tick. There's no coincidence there. And then the market's holding up near highs with a weak high. So this is what we've done. Is we've moved lower, gapped lower, market found buyers, pushed back into Wednesday's range. It pushed right into the LVN at 64 from Wednesday, and then failed to hold it and pulled back to close in the key volume area, key value area, which was as I had outlined on Friday, which was 54.25 up to this 60 area, and then the market opened, pushed through 54.25, failed to hold the 54.25, tested the other side, just 2 ticks short of the LVN up top on Friday, traded sideways, and then later in the session it put in multiple tops, and then later in the session it pushed through, pulled back to that 59.75 again, only to hold prices and build another high volume node and close near highs. Okay, so that's what the auction on Friday did. And then last night, let's look at the overnight session. In fact, it is. Last night, very strong open. It opened right where it closed, right above where it closed Friday, and immediately went higher. So again, this is a weak high close, and the market overnight immediately went through it, could not pull back to the open, showing a fair amount of strength, and then continued higher with a weak high at the top. Look at that high. It's if we look at the volume at the high, you'll see there's quite a drop, 26.60 from 43.68, 26.60, and boom, we have 10% of the prior number at the high, putting in a weak high and holding those prices. Okay, so this morning it's really important for buyers to hold prices above the 67.25, 66.50 area for some support. 137,000 contracts traded overnight. Relatively low to where we would expect it in a normal trading period in a year, but I guess fairly in line for the summer. In fact, a little bit higher than normal for the summer. We've been getting about 110 to 120,000 in the morning. The market still has another 15 minutes to add to that number. But overall, very bullish tone. However, we do have a gap. We do have a gap, and the market generally, and so inventory, the short-term overnight inventory is higher and is long. So the expectation on the open is to either test the overnight, if this stays here until the open, is to either test the overnight and then find responsive sellers back towards the 64, or take out the overnight, pull back a little bit, and then make a beeline to 75 and push through 75. It's very hard to say which one will play out first, being as we are in the gap zone. There's an elevated chance of a drive coming in, of somebody coming in and driving the market, meaning trading at a higher time frame and not being concerned about short-term levels like we look at as day traders. A higher time frame does not care about yesterday's high, low, whatever. it's trading in a wider range and executing a much bigger order through their trade desk using algos or human beings to fulfill a position, to take a position into the market. Because we have a gap, there's an elevated probability that that would happen on the open. So be careful. I would not be a strong fader on the open looking for that responsive selling back to 64. However, we are not in new high territory at all. So you could see here where we opened at 72.75, we're at new high territory on a gap. We would expect there's definitely an elevated probability of an open drive or a drive at some point in the day. And this day, what it did is it opened auction out of range, and then it found a drive later. Here, we are opening in balance. We're opening in a prior range, so it's not as distinct or clear. So the expectation is that sellers will probably have a chance to try to push this through 69 down to 67 and after 66.5 that I just talked about. Remember this gap, this LVN zone here on the overnight session. So as I said, it'll be very, very important to sit and watch at the open to see which side is in control. Remember, if you're day trading, which I assume is why you're listening to me, if you're day trading, a big part of what we do is to constantly keep tabs on who is in control of the auction. Okay, so there are different characteristics that come in to try to identify that. Again, there's more information on that at futurestrader71.com. I don't want to go over that here, but things like how it opens, who interfaces or who acts on the market at the open, and what prices are tested, what prices are respected, what prices are not, the type of volume that comes in. All of these things help us identify who's in control of the auction at the open. It's much like being a physician, a doctor. Somebody comes in complaining of pain in their chest. I'm not a physician, I know a lot of them, but the routine is to try to ask questions, to take standard, to follow a standard process of trying to identify the symptoms and then matching probabilities of what the cause could be based on the symptoms that the patient's experiencing. The patient here is the market. We are constantly taking inventory or taking a check of what the market is actually saying, and then matching that up with, okay, if the higher time frame, if a higher time frame is in control, then we're not likely to get this sort of action. Of course, if it opens and starts going up and down, equally up and down, it just means that the higher time frames, including swing traders, institutional, whatever higher time frame there is, that's the time frame that actually causes market moves, is probably standing by waiting for something, waiting for the full set of stocks to open and so on and so forth. Whatever the reason is, we don't care. We don't care about the question of why. We cannot answer that. All we can do is look at price and see where it's at. And if it's chopping, then we know that during the open, the higher time frame did not act. So we outline where the limits are for the short time frame, the opening swing for the short time frame, and then look for the break from there, because the break is probably going to be caused by the short time frame becoming too heavily weighted in one direction or another, or a higher time frame, be it a swing trader, institutional, long-term, bank, sovereign fund, whatever, is stepping into the market, and that's the side we want to go with. So in that situation, we're looking for pullbacks, we're looking for things with a clear view on what's below us, what the market has done, what the auction looks like to make those decisions. That, in a nutshell, is our job. We're detectives trying to find who's causing the moves and participating with them. Okay, so that's what I have for you. Additional headline risk, there's really not much more. I mean, I'm listening to my news feeds all day long to see if there's anything that could be market moving, but the ECB, I think the ECB is likely to become more active. Now there's some pressure from Germany about what the ECB has done or has decided to do in June, and so I expect that there will be a bunch of speakers because of that. But other than that, it's pretty quiet. We're in the middle of summer, and the focus is on being patient and thinking in probabilities as a trader. It's a very, very important factor, I believe, in your success. Take care and good luck.